On all things Microsoft and, of course, some of the other big beasts. Well, one view out there is that actually maybe these big beasts have run too far. Maybe you need to be cautious on some of the Magnificent Seven. Kathryn Rooney Vera is one of those voices, chief market strategist over at StoneX Group. And Kathryn, how are you trading? How are you thinking ahead of these big, all-important results?
Well, we have earnings this week coming up with some of the major powerhouses, Microsoft and Visa and Verizon. Across the board, you have some big names reporting earnings, some which are between 20 and 23% of their respective ETF and indexes within the communications sector, within technology. So it's going to be very important that these beat for the market to continue to move higher. They are likely to do so, but what I would say is that we're at the precipice, or we're at the very peak of where we are anticipating the Fed to, stay on hold. Everyone's expecting 25 basis points tomorrow and then on hold for a good amount of time. My expectation, however, is that if the consumer remains as strong as it has, Caroline, we had consumer confidence come in at the highest in 2 years today, then it's going to be very difficult for the Fed to get to that 2% target with service sector inflation as robust as it is and will continue to be. If that's the case and the Fed has to hike again, then this is negative for those highly interest rate sensitive sectors and stocks, which are the biggest heavyweights in the indices.
So good that you put it in the macro context. I'm therefore interested in, if you have ridden this wave, the Magnificent Seven, the big AI trade, do you have to now protect the downside? Do you start profit taking?
Well, it's a good moment to at least play the laggards, and what we've seen is some of those laggards catch up. This is the catch-up trade, is the definition of so. So it's really been tech and specifically AI that has led the market rally year to date. We have not seen material appreciation in materials or banks or industrials until today. So we are seeing industrials jump quite a bit. We at StoneX have a really big commodities section, and the guys are more enthusiastic with regard to possible demand for these materials if China does in fact come with a material or a significant infrastructure or stimulus package of some sort. So I would say play the catch-up trade, play the laggards, the cyclical laggards that will benefit from what could be a very good print on Friday. If we get core PCE coming at less than 4.6, where it's kind of been for a significant period of time, maybe 4.1, 4.2, then that's going to be additional boost for the long risk trade, which is, in my view, the most overcrowded trade today. So yes, there are potential to still play this rally, but I would advise clients that everything is cyclical. We are in an economic cycle, and in my view, the next phase of the economic cycle is going to be recession. Timing is the tricky point.
And is that global recession, Kathryn?
Well, I think it's meaningful to talk about different stages. So perhaps the U.S. enters recession after Europe does, or China enters a slowdown. So there's different phases. So it doesn't have to all happen at once, and we shouldn't expect it to. But I do believe that these delayed impacts, and everyone talks about the infamous long and prolonged impact of monetary policy, in a data-dependent Fed doesn't really mesh. So what I would say is look on Friday's number. Friday's number is probably going to be very good. And I would say Thursday and Friday, with second quarter GDP, Caroline, and core PCE coming in respectively Thursday and Friday, are going to be more important data points than Wednesday's very well expected 25 basis point hike. If the United States or if the Federal Reserve is really serious about its 2% target, doesn't change it, isn't complacent with a 3 handle or a high 2 handle, then we could get an additional hike. And if that's the case, then we're talking 550 basis points, maybe more in total rate hikes. That will start to affect the credit cycle. We're already seeing some difficulty with regard to payments in the real economy.
Kathryn, just how many of your clients are wanting to play the AI tech trade? How many of them feel they've missed it? How many of them feel that there's other names that they could look at other than some of the really big tech heavyweights?
Well, at StoneX, we do cover a wide breadth. So it's everything from commodities to tech to securities to global payments and clearing. So it's a massive company. We have 4,000 people, and it's a Fortune 100, NASDAQ listed, actually. But a lot of clients are keen on following this trend, and, they follow the buck. So what I would say is there's a lot of interest with regard to the laggards, looking at the small caps, which have lagged, for example, the triple Qs in a very meaningful way. So there's interest in finding ways to play this momentum-driven, multiple expansion-driven rally without getting into the high flyers at exorbitant multiples. And my contention, Caroline, is that the growth sector, specifically AI and tech, is trading at exorbitant multiples.
And I sort of asked a little bit about hedging. You sort of gave this very thoughtful response about, well, them playing some of the laggards in different industries. But what about volatility gauges? What about looking at ways to protect your downside? Is there a way of doing that for some of these, well, very lofty valuations?
And that's another way that our clients are playing this. With our options desk at StoneX, what they're doing is they are buying VXX options, or they're buying puts on the S&P 500 index. These are ways to protect in a cheap way, of course, because the market is so exuberant and complacent at the current levels, making this kind of a counter-cyclical portfolio policy. And this is something that I published in my piece last week. It's important to think counter-cyclically when the market is so exuberant and so powerfully positive, to protect yourself, and you can do so in a cheap way. You can hold a nice portion in cash, buy some gold, buy defensive sectors, which are very cheap at current levels, because no one's really anticipating, and I think that the recession risk is massively underappreciated currently. So that's staples, that's utilities, that's healthcare. These are sectors that are defensive and value-driven in nature, and that's also where clients are focused.
Great to get the perspective. Diversification is where it's at. Kathryn Rooney Vera, thank you so much, Chief Market Strategist at StoneX Group.